We all see the headlines about the AI gold rush. It's happening right now. But what if I told you the biggest winners might not be the names you hear every day? Today, we're digging into a secret stock, a company that's not mining for AI gold, but is selling the picks and shovels to everyone else.
You know, when you think AI, your mind probably jumps straight to the titans, right? The massive chip designers, the software giants, they're the ones grabbing all the attention. And hey, for good reason. They're like the prospectors out there striking digital gold.
But here's the thing about any gold rush. If you look back at history, the most reliable fortunes, they were often made by the folks selling the essential gear, the picks, the shovels, the wheelbarrows. In today's AI gold rush, that essential equipment is all the physical infrastructure that makes AI possible.
And that brings us to the company we're unpacking today, TSS Incorporated, which trades under the ticker TSSI. If you were looking for a textbook example of a picks and shovels play for the AI boom, well, this is it.
So, what does TSSI actually do? Well, they're not in a lab designing the next mind-blowing AI chip. Nope, they're doing something that's arguably just as critical. They build the physical homes where those powerful chips live and work.
Their main business is something called AI rack integration. Now that sounds super technical, I know, but the concept is actually pretty straightforward. TSSI takes all the individual high-tech pieces, the servers, the crazy power supplies, the complex cooling systems, and they're the experts who assemble it all into these huge, powerful racks that are the literal backbone of an AI data center.
It really boils down to a simple three-step dance. First, they team up with their clients to design custom AI racks, because one size definitely does not fit all here. Second, they get to work, integrating all that complicated hardware together. And finally, they deploy these massive, fully built units, basically plug and play.
And you know, this focus on AI was a really smart strategic pivot on their part. TSSI wasn't always an AI specialist. They made a conscious choice to shift from being a general data center builder to specializing in the really complex, power-hungry setups that AI demands. In fact, to keep up, they've even opened up a bigger factory down in Georgetown, Texas. All right, so they made this big bet on AI. The question is, did it pay off? Well, the numbers tell a pretty incredible story. And this, right here, is why this relatively small company is suddenly making some serious waves.
172%. That's how much TSSI's revenue exploded in fiscal year 2024. I mean, let that sink in for a second. That's not just growth, that's hyper-growth. That's the kind of number that makes everyone on Wall Street stop and pay attention.
You can see it right here. Revenue just went ballistic, rocketing to over $148 million. And the main engine driving that? Their procurement business, which accounted for over $117 million of that. So they're not just assembling things, they're sourcing all the high-tech parts at a massive scale.
And here's the best part. All that new revenue actually flowed down to the bottom line. This isn't just a growth-at-all-costs story. The company went from basically just breaking even in 2023 to posting a solid net income of $6 million in 2024. It's a growth story and a profitability story.
And if that wasn't enough, they are sitting on a mountain of cash. As of the third quarter of 2025, TSSI had over $70 million in the bank. That is a ton of dry powder to fund their next moves without having to ask investors for more money. Okay, insane growth. They're making money, a pile of cash in the bank. This sounds almost too good to be true, doesn't it? Well, this is where the story gets really, really interesting. We have to talk about the risks because they are significant. And here it is, the single biggest red flag you will ever see. You ready for this? In the third quarter of 2025, an unbelievable 99% of TSSI's revenue came from just one customer. A single big tech company, what's called an OEM, that sells the final branded product.
This is what you call a fragile situation. It means the entire fate of the company, everything, hangs on that one relationship. If there's any little change, a new contract negotiation, a price dispute, or if that big client just decides to go in a different direction, it's an absolutely massive, potentially company-ending risk.
Now, the second big risk is what I'm calling the margin dilemma. So, despite all that massive revenue we just saw, the company's net margin is razor thin, just a little over 2%. So what that means is, for every $100 in sales, they only keep about $2 in profit. There's just no room for error. One small miscalculation on a big project could literally wipe out their profits for an entire quarter.
And it looks like the market has definitely noticed these risks. Right now, about 16% of the company's available shares are being shorted. For those who don't know, that means a significant chunk of investors are literally betting that the stock price is going to fall. And that short interest has jumped 4 to 5 times higher in 2025 alone, which is a huge red flag that a lot of people think the risks are just too big.
So what you have here is this incredible tug of war, right? On one side, you have the bull case with this amazing growth. And on the other, you have the bear case with these terrifying risks. So where does TSSI go from here? Let's break down how this could all play out.
The company's future really hangs on a few key questions. Is this AI demand going to keep up its torrid pace? Can they, and this is the big one, can they finally land a second or third major customer? Can they get their costs under control at that new factory to improve those tiny margins? And are they going to have to issue more stock to keep growing?
So, this table kind of lays out the 3 main possibilities. In the bear case, that customer risk finally catches up to them, and analysts see the stock falling into the $4 to $6 range. The base case is, they do okay, they keep their big client, and the stock pretty much stays where it is. But in the bull case, they pull it off. They diversify, they become a real leader in AI infrastructure, and the stock could soar, potentially into the $14 to $18 range, or maybe even higher.
So at the end of the day, it all comes down to this one central tension. You have the bulls, who see this explosive growth story right in the heart of the AI revolution, with a great balance sheet to back it up. And then you have the bears, who see a company walking on a razor's edge, with extreme customer risk, paper-thin margins, and a whole lot of smart money betting against them.
Which brings us to the final question we have to ask. Is TSI a hidden gem, a future tech giant that's just getting started? Or is it a really high-stakes gamble where one wrong move could bring the whole thing crashing down? The data's all there, and honestly, only time is going to tell which story wins out.